Chavez for NYSE TV, and joining me today is Jose Briones, a senior partner at PennantPark. We continue with our video series on private credit investing, and today's episode we will talk about PennantPark's target borrowers and their business plans. Jose, welcome to the New York Stock Exchange.
Sure. Thank you very much. It's great to be here today.
Absolutely.
Yeah.
So let's start by talking about PennantPark's investment philosophy.
Great. Look, our investment philosophy across our platform is capital preservation.
Okay.
We like to invest in growing companies with lean market shares, run by great management teams, backed by strong private equity sponsors.
Now, does PennantPark have a focus in terms of borrower size?
We do. We focus on the core middle market, and we define the core middle market with companies of revenues of $75 million to $500 million and earnings of $10 to $50 million. These are privately owned businesses, are led by founder owners, entrepreneurs, and our capital is very strategic to these borrowers. We may start with a small loan and grow over time. And from time to time, we also like to invest in the equity of these businesses.
Now, do you target any specific industries, and are there any ones that you avoid?
Yeah, that's a great question. We do. We have 5 core industries where we have an excellent track record and domain expertise: healthcare, government services, business services, consumer, software, and technology. In these industries, these are growing industries where there's stability of cash flows that we can underwrite. We do avoid heavy cyclical industries with a lot of capital expenditures that have volatile cash flows.
Now, we talked a lot about qualitative characteristics, but I want to talk more about the quantitative side. Are there specific metrics that you look for when it comes to underwriting an investment?
We do. The first is the total debt relative to the earnings of the business.
Okay.
The second one is the interest expense relative to the earnings of the business. And finally, we look at the loan to value, which is the loan relative to the total enterprise value of the company. We target a leverage ratio, total debt to the earnings, of 4 to 5 times. We also look at the loan to value ratio of 35 to 50% of the capital structure. Our team spends a significant amount of time underwriting a business. Part of that underwriting is looking at the historical financial information and modeling different scenarios. Ultimately, we want to make sure that the borrower can pay us back. And when they don't, we look at the enterprise value of the business to help cover the loan.
Well, you have covered some very important topics. Thank you so much, Jose, for joining me today.
Thank you, Trinity.
Absolutely.
Great.